Let's discuss one of the agreements which you will be using a lot. It is exclusive right of listing, and there are a few. So one is exclusive brokerage listing agreement. Another one is exclusive right of sale. So what's the difference between these two? Does anybody remember from school?
Exclusive brokerage listing and exclusive
Right of sale, and there are a few exclusive right. And where I'm looking at now, where can I find? So I'm just in that loop. We have we go to templates, and then master folder, and then over here you type exclusive. Exclusive. So first one which comes up is exclusive brokerage listing agreement, and let's open it up in a separate document. So exclusive brokerage, and let me open up another one as well. Exclusive right of sale listing agreement. First one is when you point in that loop, you see, so it says for commercial property, then exclusive right of sale listing agreement transition to transaction brokerage, exclusive right of sale agreement, no brokerage. We always use exclusive right of sale listing agreement transaction brokerage. Make sure you use this one because we are transaction brokerage. The difference between there are a few agency types, single agency, and this is one, and then transaction brokerage, and then there is another one, no brokerage relationship. So the transaction brokerage means that we can work with buyer and seller at the same time. We can represent both. We can act because when you have a single agency representation, it means that you cannot represent both buyer and seller in a transaction. Okay, so it gives you some limitations. That's why from the beginning we decided that we will be the transaction broker. Okay. So what's the difference between exclusive brokerage listing agreement and exclusive right of sale listing agreement? Anybody? So the main difference is that exclusive brokerage listing agreement is exclusive right, will give you exclusive right to sell, but in case if the buyer will come to seller directly, then you will not be obligated to receive a commission. So it's only you will be listing the property. And why, when we use these agreements, when we have a listing, so you already went to a listing appointment, or it's somebody you know who call you and ask, please, can you list my property? I want to sell it. And right now it's a seller's market. That's why right now you can receive requests to list the property anytime. And this agreement these agreements we use for specifically to list a property for sale. So exclusive brokerage listing agreement is less beneficial for you because it limits you to the MLS and to the clients whom you offer the property. And at the same time, seller, the owner, can be advertising the property, asking his friends and family to go ahead and take a look at his property. And then if he finds buyer himself, he will not be obligated to pay commission. Okay. So in your interests to sign the exclusive right of sale listing agreement. Okay. Because exclusive brokerage, meaning that we will be the exclusive company, exclusive brokerage company, which will be able to advertise it. So let's focus on this one, exclusive right of sale listing agreement. So what goes into this agreement? Obviously seller, and remember how we can look it up or look up this information. We can go, for example, if the property is in Broward County, we just go to bcpa.net, then we click on property search, and then we look it up by owner name, by the address, by property ID, for example. If it's in Miami-Dade, just type Miami-Dade property appraiser, and then we can do the same with Miami-Dade County. Same with Palm Beach, property search. I will do a listing with, I guess, for example, we can do, I'll do listing for one of my properties, just me as an agent, and let's do, or just any, do you want, does anybody have a listing coming up? I mean, I can help you to do that, or I can use something, something which I know. So let's do an example of listing agreement for, let's do this one. Or actually, let's do my property. So I just found it. So what I need to do, seller, just type it from here, copy and paste, then broker. For example, let's say, Victoria, you're doing the listing. And then you type Vera Realty LLC. Okay. Seller includes the broker. Then we go to authority to sell property. Seller gives broker the exclusive right to sell the real and personal property, collectively property described below, at the price and terms described below. Beginning, this is the date when the property, when you basically will have the listing. So let's say you agree that you already have all the pictures for the property, and you will need time to prepare the listing. So let's say you will be posting the listing on the 12th of November, and termination date. So usually terminate, I mean, at least you need to try to get the listing for half a year. If it's a more luxurious property, I mean, do at least a year, because you will be investing time and your energy into marketing it, advertising. So it's much better to have it for a year at least. Right now, with today's sellers market, especially for single family housing, you are safe with, I'll say, 6 months. I mean, obviously depends on the condition of the property, but safe, I mean, 6 months will be enough. So I will put November, December, January, February, March. So let's see, how many months is it? December, January, February, March, April. Yep, so we will have until April 12th. So that's for how long we will have the listing for. Then we go to street address. So street address we can find also from BCP, from the property appraiser website, just copy and paste. Legal description also can be found here. Then personal property, including appliances. So this you need to ask the seller. So what does the sale will include? Does washer and dryer come with the property? Does like some expensive fixtures? Is there any furniture comes with the property? So over here you can say, for example, I mean, I will include washer and dryer with the sale, and then kitchen appliances, they goes by default with the house. But if you, let's say, I also would like to sell with the furniture. So we can put all furniture, and then in the parentheses, price for furniture is negotiable. So basically price, it will not be included in the listing price, but I can include all the furniture and we will negotiate separately on the price of furniture. If your seller would like to include the furniture in the deal, I always used to ask for list of all the items which they want to include in the transaction, and that way you can also justify the price before, because it always will come to the question, okay, how much does the seller want for the furniture? And then you will go to the owner, you will ask them how much they want, they will start thinking about it. So better to prepare for it ahead of time, create a list of all the items, and there is no specific form for it. You can use simply like a Word document where you will type every single item, or use at first like a notepad to write it down, and then you convert it to the E format, save it, and at this at this piece of paper you will also need to find out on the approximate price for the package. And I can show you the example. I believe I have it here. 1 second. Go to Dropbox. So for example, no, let me see, this is not it. That's the list. So you include all the items, and I mean, the owner will tell you approximate price for it. And that way you can approximately, see what it is. So like master bedroom beds, like if there is some like pool table, living room, if any tables, carpets, etc. All this, item by item. And what you can say here, see attachment, if you will be preparing it. If not, then just remove it. But I highly suggest you to prepare it. And actually there is a check mark too. You can create, see attachment, and you can call it furniture package. Okay. Then next point is occupancy. So if property is or is not currently occupied by a tenant, and if it's occupied, then you need to specify the terms of the lease. If it's not occupied, you don't need to specify it. And if there is no lease in place, basically you say it's not currently occupied. That's it. If it is occupied, then this is a very important part, because you will be limited to some of the clients, because some clients looking right now for themselves and they would like to move in quickly. But if tenants have agreement in place, for example, which expires in like same April 1st, you will be limited. And actually this is a very important part. You need to find out if it's leased out, then you want to extend the listing time, because with the tenants, I highly recommend you to take at least a year, because it's takes much longer to sell with tenants in place. This is by experience, by all the deals which I saw. It can take much longer to sell with tenants in place, because you limit your buyers, the amount of buyers who are willing to wait or who are looking only as an investment. And also, if it's leased out, so let's say it was leased for, let's say this house was leased for like 7,000. You need to calculate the return which it generates in order to understand the cap rate, how much giving the profit. That's another point which investors will ask you. So property is not currently occupied. And then next point is price and terms. The property is offered for sale on the following terms or on the terms acceptable to seller. So price. Again, we can do CMA analysis ahead of time. I have a separate training on how to do CMA. We have a great tool in the system in KV Core, and I'll quickly show you how to do that. So we just go to marketing autopilot, sorry, lead engine. Yeah, we go to lead engine, and then you click on CMA builder, and then you type in the name for whom you're preparing the CMA. But this done at the list before you go to the listing appointment, obviously. But just to get an idea of the price, so it will take like 30 seconds to do that. Another way you can go to, if let's say you want to, sometimes the KV Core will not have enough comparables and it will say CMA cannot be prepared. Then you need to go to, I'll show you the training which I have for it. You can watch this training. We will do it sometime in the future too in the office, but ahead of time, I highly suggest to watch this one because it will show you how to do this current market analysis with Matrix, with the tools which we have. So the CMA was generated. So we click here. And then it gives us the property value, the range, and it based it on the similar sales and active listings and historic sales. So it takes into consideration all that. So based on CMA, we have a price of adjusted property value $605 per square foot, 1.2, and the value ranges from 966 to 1.45. To double check, you go to Matrix and do this CMA too, to be sure, on the property value. And you need to present this price to the seller. And you need to feel confident that at this price you can sell. So for example, if we have adjusted property value 1.212, we don't want to overprice and we don't want to downprice. Right now it's seller's market. So we can see that if we look at the historical sales, we can see that some houses like 4 bedrooms, 3 baths, and we definitely need to look at them more in details, see the upgrade, see the interior, but the prices here is like 1.23, 1.4, 1.06, 1.25. So to justify the price, we really need to ask the owner to see what has been done to the property. Because if we look at the history, for example, this house was purchased for $810. So to justify the price of for CMA, for example, which is like 1.2, the appraisal also will be asking these questions: what has been done? So the owner will tell you there was a new kitchen, was a new floors, there was a new driveway, a new patio, so a lot of updates. For that, you also can create a separate list, upgrades for this particular property. And you will list all the items. Item 1, new kitchen, and then you can ask the seller, how much did you spend for the kitchen? For example, he will tell you $20,000. Then new driveway, etc. And you keep this list, because when the time for appraisal will come, if you have a buyer who looking to buy it with financing, the appraisal will ask for the list of that. If you will not provide the list, then you might not, the property might not appraise at that level. You can basically, because of that, the transaction can fall apart. So this is a very important step. If they didn't do any upgrades, that's fine too. Maybe just the market went up. So it's all depends, but it's very good to be prepared for the appraisal as well. So this is a very important part. Then price. So let's say the owner didn't do any upgrades, but the market went up, but he wants to sell. So we will list a little bit below than adjusted property value, and we will put the price of 1.119 to sell it quick. If the seller did upgrades, and let's say they put new kitchen, new driveway, new backyard, etc. It can be a huge list. And then they said, we spend more than $200,000 towards upgrades. So then obviously the price will be different, and you will list at 1.39, something like that. So for this one, we will say, let's say we want to sell quicker, we need cash, so we'll list at 1.19. And financing terms can be cash, conventional, FHA. VA, it will not be available for this property because there are VA, it's Veteran Affairs loan, and there's a property limit on it. So if we take Veteran Affairs property price 2020, so we will see that, let me see, Veteran Affairs, loan, property price. VA funding, closing costs, let's see, VA mortgage limit 2020. And we go to va.gov. So right now, because there are limits. Last year it was, I believe, 417,000, the purchase price. Okay, let me see, max. Okay, so 2020 increase to 484,350. Let's see. And it's all actually by counties. So let's type, and by city too. Let's type for Lauderdale. So we have, the limits is 510. Loan, it's only for loan. So if the loan, max loan amount can be 510, 400. And if, let's say, veteran tell you that I have 20% down, meaning that 20% down, the 80% will be 510, 400. So how to get the max purchase price? So we need to do 510, 400 divide by 0.8%. Well, 80%, sorry, but by 80%. So it comes to $638,000. This is the max purchase price if we're doing the loan, VA loan, with 20% down. And again, if you have a veteran who reached out to you, or you have a lead for veteran, just ask me, I'll guide you, because that's how it's calculated. Okay, any questions?
No.
That's about, so you see, like veteran affairs, I don't know, I've done before, when I was selling in the West Palm area, I've done few transactions with VA loans. I mean, it's pretty straightforward. It's actually easy process, but you need to be sure that the property is eligible for it. So as we found out, the max property price will be 638, so this one will not be eligible. Only if they are ready to put down 50%, 60%. I mean, we can still check it, but again, I think there are property limits, and I mean, not to waste time, because I know about 1 million, it will be regular loan. But again, this can be, I mean, never saw a property with VA loan higher than a million, because usually veterans put down about 3-5%, 10% down. But I mean, if you have somebody approach to you asking about VA loan, you basically can ask how much do they have for down payment. If they have, in that case, they will need to have, let me see. So the limits are 510, 400. So we will take 1.19 minus 510, 400. So they need $679,600 as down payment. To continue, this is in case if there's private lending, for example, we can say we can accept private mortgage from lenders. Then seller financing. This is in case if we would like to, I mean, you can ask seller, are you willing to do seller financing? Meaning that, I mean, basically it's like owner financing. And we can say, yes, why not? So I will say $600,000, I can do seller financing at, and here you will say following terms. Let's say I want to have 5% interest, 30-year, based on 30-year loan period, and after 5 years, it's going to be a balloon, so they will need to refinance after 5 years. Basically, what does it mean? I can offer $600,000 at 5% interest based on 30-year loan period, but after 5 years, it will be a balloon payment, or they need to refinance with the bank. So I'll give them 5 years where they can build the history and pay this mortgage, and then they can go to the bank, and at 5 years, I will receive 600,000. And I can say no prepayment penalty. Again, not too many people want to do seller financing. So if they're asking you about seller financing, I've done the deals with the seller financing too. It's not rocket science, but there are some details. So reach out to me too if you have somebody who wants to do that. Assumption. So if there is existing mortgage, the new buyer can assume it. Again, we can open it up. I mean, for as an option. For this property, there is a mortgage. We have mortgage on it, so basically a new buyer can assume it. And but these details need to be verified with the current note holder, with the bank, to see what exactly they can. I mean, how can it be done? So without talking to your bank, this is not an option. Then seller expenses, seller will pay mortgage discount or other closing costs not to exceed. Again, this is, you can ask the seller, usually they don't provide any additional discount, but this is in case if there is a mortgage inception going on, if they can give a discount and pay for some of the closing fee, because new buyer will pay for assumption of mortgage at least, I mean, usually it's 1% base point, one base point, which is 1% of the loan value. So you can say it here, but you can just leave it blank. So next, broker obligations. Broker agrees to make diligent and continue efforts to sell the property in accordance with this agreement until a sales contract is pending on the property. Multiple listing services, this is about MLS. Placing the property in the multiple listing service, the MLS, is beneficial to seller because the property will be exposed to a large number of potential buyers, etc. The MLS principal broker is obligated to enter property into the MLS within 1 business day of marketing the property to the public. So basically, you have 1 business day after the agreement signed to enter it to MLS. That's how it works. This listing will be published accordingly to MLS unless seller directs otherwise in writing. Seller authorizes broker to report to the MLS this listing information and price, terms, and financing information, or any resulting sale for use by authorized board association of members and MLS participants and subscribers, unless seller directs broker otherwise in writing. Again, seller can authorize broker and instruct them not to list the property in MLS, but again, what's the point if you want to sell? I mean, MLS is one of the best way to reach out to other agents, to buyers, etc. Number 6 is broker authority. Seller authorizes broker to market the property to the public. Public marketing includes but is not limited to flyers, yard signs, digital marketing on public websites, brokerage websites, etc. Public marketing also includes marketing the property to real estate agents outside broker's office. Place appropriate transactions, signs on the property except if checked below. Use seller's name in connection with marketing or advertising the property. Display the property on the internet except a street address. So this checkbox only checked if it will be displayed on like all outlets like Zillow, Trulia, but it will not be published with an address. I mean, again, I'm not suggesting this option. Not publicly market to the public, seller opt out. So seller does not authorize broker to display. That's the if the seller by any reason saying that they don't want to property be publicly available to to the market via MLS or other internet resources. And again, they need to justify that, because otherwise it will be as an off-market pocket listing, and you need to talk to the seller, and because right now it's seller's market and you need to have exposure for the listing in order to sell it quicker. Next, seller understands and acknowledges that if seller checks option 6B1, which is seller does not authorize the broker to display the property on MLS, broker will be limited to marketing the property only to agents with broker office. So basically, that means that if the initial here and the check mark is here, we can advertise it only among each other within our own brokerage. Next one, C. So again, it's broker authority. What we can do: obtain information relating to the present mortgage on the property. We can talk to the bank, provide objective, and actually this important point, because by talking to the bank, we can figure out if maybe the payments have been made, maybe there are some issues, so maybe it's due to foreclosure sale. So it's very good to get the loan number from the seller and to call the bank, and you can present this agreement so they will be able to tell you details. Provide objective comparative market analysis information to potential buyers. Use a lockbox system and access the property. This is definitely a yes for the houses, sometimes apartments too. A lockbox doesn't ensure the property security. Seller is advised to secure and remove valuables. Seller agrees that the lockbox is for the seller benefit and releases broker persons working for broker and broker's local realtor board association from all liability and responsibility in connection with any damage or loss that occurs. So basically, it gives us a peace of mind and protects us from liability because of the negligence of other brokers, other realtors, and agents who, for example, forgot to lock the door and there's something missing. So this paragraph protects us. Then there is an option here that we can withhold verbal offers. Withhold all offers once seller accepts a sales contract on the property. Sometimes this option can be good, because by default, we need to present every offer which comes to us in writing, and we need to send it and present it to the seller. Let's say, because sometimes what happens, let's say we listed at 1.19, we received full price offer, it's under contract. And then in the following day, we receive an offer, which is 1.2. So then sellers will be discouraged and will try to exit from the current contract, and they already cannot do that. And that's why sometimes it's better to withhold all offers when there is it's under contract, and you can withhold or accept them as backup, but only and it will be you will be withholding it in the sale if will be closed. You don't have to present these offers anymore, and you just keep them on file, but you do not present them to the seller. So it really depends. You need to justify if you want to withhold offers after they went on the contract, because it can create additional problems. Virtual office websites. Some real estate brokerages offer real estate brokerage services online. These websites are referred to as virtual office websites. So this they refer to Zillow, Trulia, and other outlets, Realtor.com, etc. And there are check marks which seller also can ask you to not to publish on these websites. But again, I don't advise to do that because it limits the outreach. And but if for some reason they want, they can. It's here says seller does not authorize an automated estimate. This is if they don't want to Zillow give the estimate on the property. You can check that. And then seller doesn't authorize third parties to write comments or reviews about the listing on the property, display hyperlink. So again, this is about if 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 the seller doesn't want to have it, in other outlets where people can comment, can write a review about this property. Again, I mean, I don't suggest it because people look at Zillow, people look at Trulia, so you can just leave it blank and advise seller not to check those. Because I mean, and when you're signing the exclusive right of sale listing agreement, you guiding your client, the seller, on what to sign, what not to sign, and you explaining them what everything means. So after we finish with this session training, I highly recommend you to review it, to read it one more time, so you knows what it's all about. Seller obligations. In consideration of broker obligations, seller agrees to cooperate with broker in carrying out the purpose of this agreement, including referring immediately to the broker all inquiries regarding the property transfer, whether by purchase or any other means of transfer. So seller, in this agreement, we have seller need to communicate with us about anything what's going on with the property. They need to recognize broker may be subject to additional MLS obligations and potential penalties for failure to comply with them. Provide broker with keys to the property and make the property available for broker to show during reasonable times. Inform broker before leasing, mortgaging, or otherwise encumbering the property. Identify broker and hold broker harmless from losses, damages, costs, and expenses of any nature, including attorney fee, and from liability to any person that broker incurs because of the seller's negligence, representations, misrepresentations, actions or inactions, the use of logbooks, the existence of undisclosed material facts. So this, it basically protects us as brokers and agents from some negligence. It doesn't mean that you can go and put a logbooks, then leave it open or something like that. It's here, but again, it's you need to be very due diligent and on every action what you do. Then next one is perform any act reasonably necessary to comply with Ferpta. And we will have session on Ferpta with Alana in the office, where she will describe it in more detail, the procedure. If Ferpta is the act, basically, if the owners are not residents of US and they live overseas, there is a certain procedure which need to be in place before closing and before the listing too. So you need to ask your seller, are they US residents? If they're not, or US citizens or green card holders, or they live here on premises. If they're not, they live overseas, this Ferpta Act will be very important for them. Next one is make all legally required disclosures, including all facts that materially affect the property value and are not readily observable. So again, this is the seller obligations to the broker, readily observable or known by the buyer. Seller certifies and represents that seller knows of no such material facts, local government building code violations, and observable defects other than the following. So if they know something, they need to write it down here. Seller will immediately inform broker of any material facts that arise after signing this agreement. So even if something occurs after this agreement was signed, they need to inform you accordingly to this agreement. H. Consult appropriate professionals for related legal, tax, property condition, environmental, foreign reporting requirements, and other specialized advice. So basically, again, we are not we're not accountants, we're not legal advisors, and we cannot provide legal advice, not accounting advice, not environmental advice, not even foreign reporting requirements advice to the seller. We have a network of licensed professionals who can provide this advice. Again, you don't want to advise sellers or your clients on something you don't know. If you're advising them based on your experience, you need to give them disclosure. You are not a licensed accountant. You're not a licensed attorney. This advice is for information purposes only, and you need to say that, or you need to send them email better so they have it in writing. This is very important point. Then number 8, compensation. Seller will compensate broker as specified below for, this is our favorite part. So broker as specified below for procuring a buyer who is ready, willing, and able to purchase the property on any interest in the property on the terms of this agreement or any other terms acceptable to seller. Seller will pay broker as follows. So basically here we talk about commission. So total of the purchase price, 6%. Then this is consideration paid of option. We leave it blank. It's an option to sell. This is very rare. It's basically an option to sell, and you will get some fee from it. And I mean, usually we charge 6% total. And if you find, if it comes from another broker, this will be in this point, and we'll move to this paragraph shortly. And then number C, gross lease value as a leasing fee. So if you are making a lease agreement at the same time, that means that you need to specify here that you will be charging the commission if the property is leased. So you put 10% of gross lease value as a leasing fee. So 10% total. Then D, broker's fee is due in the following circumstances. If any interest in the property is transferred, whether by sale, lease, exchange, government election, bankruptcy, or any other means of transfer, regardless of wherever the buyer is secured by seller, broker, or any other person. This is very important. This is the main difference from this agreement, where if seller sells himself or find buyer, we're not getting the commission. Over here, it clearly states that we will get commission even if there will be a buyer who will come directly to seller through our advertising. Somehow we still will be obligated to get commission. If seller refuses or fails to sign an offer at the price and terms stated in this agreement, defaults on an executed sales contract, or agrees with the buyer to cancel an executed sales contract, and then there is a protection period. If within, usually I put 120 days after the transaction termination date, seller transfer or contracts to transfer the property or any interest in the property to any prospects with whom seller, broker, or any real estate licensee communicated regarding the property before termination date. So basically here, if there was a client who came and to the showing, you show the property to them, then this agreement expired on April 12th. We have 120 days of protection period. Let's say in June, the same client make an offer and they close. you are protected because 120 days will cover you and you will get the commission. Next one is retained deposits. Um, as consideration for broker services, broker is entitled to receive. So by default, it's 50. Usually I'll prefer to keep it as that. So let's say there was a down payment of $20,000 on the contract, then the buyer defaulted on the purchase, and the broker will get, so the agent will get 50% of the deposits which was made. In that case, it's $10,000. $10,000 to the seller, $10,000 to the brokerage. Cooperation with and compensation to other brokers. Notice to seller. The buyer's broker, even if compensated by seller or broker, may represent the interest of the buyer. So meaning that we are transaction brokerage, we can represent both, buyer and seller. Brokers' office policies to cooperate with all other brokers except when not in seller's best interest, and to offer cooperation in the amount of, so over here we put 3%. So we're offering 3% to the other side. To a single agent for the buyer, same 3% of the purchase price to a transaction broker of the buyer, and usually it's 1% if there's a broker and they have no brokerage relationship to the buyer, so it's like a referral. So the buyer, they just give you the buyer to you directly, and you work with both seller and buyer, and you only pay 1% referral fee to this agent. Brokerage relationship. Broker will act as a transaction broker. Again, we are transaction brokerage. We act as transaction broker. It's very important to always, when you prepare documents, you need to prepare them as a transaction brokerage. Then next one is let's see what else. So that's basically description of what we do as a transaction broker. We will account for all funds. We'll use skill, care, and diligence in a transaction. We'll disclose all known facts that materially affect the value of residential property, which are not readily observable to the buyer. We'll present all offers and counter offers in a timely manner unless directed otherwise in writing, and will have limited confidentiality with seller unless waived in writing. Conditional termination. At seller request, broker may agree to conditionally terminate this agreement. If broker agrees to conditional termination, seller must sign a withdrawal and reimburse broker. Basically, what does it mean if the seller would like to cancel the listing contract? They can, but they need to justify it why, and then we need to put a cancellation fee. On listings more than $1 million, the cancellation fee can be all the way up to $5,000 because you invest time and money, and the seller will be obligated to pay you that cancellation fee. So I highly suggest to put cancellation fee here. Otherwise, it will be easier for the sellers to cancel. Dispute resolution. This agreement will be construed under Florida law. All controversies, claims, and other matters in question between the parties arising out of or relating to this agreement or the breach will be settled by first attempting mediation. So first, it's going to be a mediation attempt. If litigation arises out of this agreement, the prevailing party will be entitled to recover reasonable attorney fees and costs, unless the parties agrees that dispute will be settled by arbitration as follows. So this is basically what does it say, that if there is a disagreement and it goes all the way to court, if mediation is not working, then it goes to arbitration. Arbitration is a very expensive process, and that's why usually everybody trying to settle during mediation. But if everybody initial here, then instead of if mediation will not work, in the next step it will go to the regular court, and if you don't want that to happen, and if mediation is not successful and arbitration is required, you need to place initials here. When this is done, basically it's more protecting you, because if for example, there was some negligence with this listing and you act negligently, then arbitration is more expensive, so for the seller. But at the same time, if the seller acting in negligent way, then it will be very hard to get this $5,000 out of them for arbitration, and this will be much more expensive than $5,000. So we don't. I mean, I never put initial here. I don't want arbitration to happen, but again, it's up to you. If you have some thoughts about it, we can discuss that, or better to consult with an attorney too. But usually I don't advise to initial here. Again, depends on every listing is unique, every deal is unique, and it might be necessary here. Let's say if the cancellation fee, if it's a multi-million-dollar house and it's let's say $20 million property, so you want to put, you will be doing a video, you will be doing a lot of broker open house, you'll be doing events, advertising. So you can put cancellation fee of 100,000. Then arbitration might be worth it because it will be less than 100K. But again, it's very, very case by case. Next one, 13, we're almost done. Miscellaneous. This agreement is binding on seller and broker, heirs, personal representative, administrator, successor, and assigns. Broker may sign this agreement to another listing office. So basically, this agreement can be transferred to, to other listing office, can be transferred to personal representatives, administrators, etc. It's for our benefit that we have an option what to do with this agreement. Then additional terms. Again, here, if there is something on the side note you discussed with seller, for example, here you can specify the furniture package price. You can specify some other details if there are expensive fixtures which are not included in the sale, etc. Everything you discussed can be here in additional terms. You can also specify more in detail seller financing, more details, etc. So then signatures. Again, seller need to sign. If there are two sellers, they both need to sign. And then authorized sales associate or broker. So you signing here. Or what I do, I need to initial this agreement as well. So when you're preparing this and you're sending it for review to me, make sure you select me as initial here, so I can go ahead and review it and initial as well. You initial over here, and then seller's initial on the right hand side, every single page. So this was the exclusive right of sale listing agreement. Do you